Hey everybody, welcome back to Accounting 1101. In our video right now, we're going to talk about an accounting report called the trial balance. A very important step in our accounting cycle is making a trial balance. And our goal right now is for you to get an idea of what is on the trial balance and how it comes together. Let's get right to it. Here we have a trial balance, and just kind of take a look at it here. You can see we've got our company name, report title, and the date right there. You can see we got our accounts are listed out here, and we've got a debit column and a credit column totaled up at the bottom. You'll notice they equal. So what's going on here? Let's take a little bit deeper look. By now, you should know our accounting system always must be in balance. Right? Assets equals liabilities plus equity. Debits equal credits. Accounting system, always in balance. When I say in balance, I mean just that. Debits equal credits in dollar amount. So, we have two choices that we can kind of decide here. Two things we can pick from. We can, one, trust the accounting system is in balance. We can just wildcat it and say, yeah, it's probably okay. We're good accountants. We don't trust. We verify. We make sure. We verify the system is in balance. The way we do that is with our trial balance. It's an internal accounting report. The public doesn't see it. It's going to be used by the accounting department. All right? It's going to show the ending balance of every account in the accounting system. And again, we're trying to see if the accounting system balances. That's where we get the name, trial balance. I love things that are named according to what they are. A descriptive name. I love it. Trying to see if we balance. Trial balance. So if we go back and look at that report, a few things to point out. We have one number per account. That number represents our ending balance. At the bottom, the debit side must equal the credit side. If it does not, our accounting system is not in balance and we've boogered something up along the way. There's a problem somewhere. Accounts that don't have a balance, nothing in the account, we leave it off. We don't need to have a bunch of zero accounts on there. And there's an order that we normally have the accounts on in the trial balance. You see we got our asset accounts, our liability accounts, our equity account, revenue, and expenses. That's the order of the trial balance, just like that, every time. So where in the world do the numbers come from? I said, well, they're the ending balances in every account, right? Go back to our T accounts that we looked at in the last video. We know those ending balances were calculated by taking the positive side, subtracting out the negative side of the account. And we know the numbers came from our journal entries, that process of posting the journal entries to the ledger accounts here. So, what's going on? We take these ending balances and we plug them into the trial balance. Easy as that. That's all we're doing. You'll notice on my asset accounts, all those are debit balances. And we plug them in on the debit side. We don't flip them around. Liabilities, we got two credit balances. Common stock, credit balance. Dividends is a debit balance. Revenue, credit. And our expenses are debit balances. We total them up. And if we have not angered the accounting gods, they should equal. In our trial balance right there, we have found favor with the accounting gods. And they have allowed our accounting report here, the trial balance, to equal out as it should. So that's all there is to it. Trial balance is simply just taking the ending balances, plugging them into a report to make sure our accounting system is in balance. We do that. We have to do that to make sure it's in balance before we go any further to our next steps. We'll learn about adjusting entries. We'll learn about making the financial statements. All right? So we have to kind of do that step before we move any further down the road, because if our accounting system isn't in balance, it's pointless to go forward because none of the reports are going to be correct. So, very important part of the accounting cycle. Now you give it a try. Got a trial balance here. We've got the T account with the ending balances already calculated for your convenience. See if you can make a trial balance. If you want to just scratch it out on paper, you can do that. If you want to print off the PowerPoint slides and fill it in that way, you can do that too. Pause and make that trial balance magic happen. All right, hopefully you've had a chance to do that. What did you come up with? Hopefully it looks a little bit like what you see right there. 4,500 is our total on both sides. Good. We need that trial balance to balance. You can see we've taken the ending balances and plugged them in. Hopefully you put it in the correct order as well. Asset accounts, liability accounts, our equity account, revenue, and expenses. So, trial balance, good times. What's next on the agenda? In our next chapter, we're going to talk about adjusting entries and why we have to make a few more adjustments to the accounting records before we can make our financial statements. I told you in the very beginning, in like chapter 1 or 2, we were working backwards. We looked at the financial statements and showed you what the end result of the accounting process was. And then we started working through the process. So now we're almost back full circle to those financial statements and the end of our accounting cycle. All right? Looking forward to that. That's going to be fun times when we talk about adjusting entries and we really start to make those financial statements. If you have any questions about anything you saw in the video, the reading, or the homework, I'm your guy. Feel free to reach out. I'd be happy to help you with your accounting troubles. Until next time, take care, everybody.